Okay, class, we're going to finish up working on our financial statements. We have completed the transactions for the month of December. Now we're going to utilize that information and prepare the financial statements. So I'm going to go up and just give you a snapshot of the numbers that we're going to be using. We're going to be using the revenue numbers because we're doing an income statement, which you know is going to be the expenses subtracted from the revenues. So the first thing is, what is our revenue number at the end of December? Looks like it's $7,100. So I'm going to put that in the field. Second, we need to detail the specific transactions for the expenses. Let me get this straight here so you can see everything. Good. So rent expense, it looks like we paid rent, that's $1,000. So we'll put that there. And we paid salaries to one of our staff, and I think it was on the 29th, right, this transaction right here. So I'm going to put that in the appropriate field. And we made some utility payments, and I'm looking, so we made $540 of utility payments. So, that being done, let's go back up to here. I don't know why I did that. I'm going to sum these transactions here just by adding all of the expenses. Which is $1,000, $1,400, and the $540. Now, net income, as you know, is going to be $7,100, which is the total revenues, subtracted by the $2,940, which is the expenses. So we're going to calculate that. Subtract. And we come up with $4,160 in net income. Let's keep starting here. Beginning of the month, they had no equity, but the owner invested $65,000. So we're going to include that $65,000 in our equity statement. And we're doing a statement of owner's equity. This is a sole proprietor. We just calculated the income, so that's $4,160. And now I'm going to sum these numbers using our Excel formula. Sheesh. Do that again. Make sure we did it right. So let's try that once more. Very good. Hopefully this works. Okay. Now it looks like we have a transaction of a withdrawal transaction. And let's look at our numbers. We look like we withdrew $950. I'm going to put this in as a whole number. Hopefully it'll work. Now we are calculating the new owner's equity at the end of December. And we're doing that by taking the $69,160 and subtracting the owner's equity. And this is going to be useful information because we're going to use this to prepare our balance sheet. So I'm going to scroll down a little further and we're going to do our balance sheet. According to our transaction list, our balance in our cash account is $59,180. And we have accounts receivable balance of $900. Office supplies total $1,150. And we have office equipment of $2,530. These are all the transactions we recorded in the month. And finally, $13,000 was spent for equipment. And I'm going to scroll up so you can see these numbers on our spreadsheet. And that's going to be me just summing up all of these transactions. And I'm going to see, it gets so silly when I don't know why it does this when you look at this spreadsheet. It just doesn't utilize Excel the way I would normally use it. I'm going to go all the way up. If I could get this to work. Let's go all the way up. I'm not sure why it's doing this. So let's do it a different way. I'm just going to do it a different way here. Let's see. Okay. Let me give me a second. This is not the easiest of spreadsheets to utilize. So I'm just going to have to hard code it because it's just not working. Shouldn't have to do this. It should automatically work. It's an Excel spreadsheet. Um, and I'm going to try to copy this. Again, it's a little kooky because I'm using this template that is created by the author. And so these are the numbers where we'll be using, and I just wanted you to see how they looked and what their role in creating this balance sheet. So at this point, we're going to total all of our assets, and it looks like it's from E and then go all the way down. So now let's work on our liabilities, and I'm going to move my screen over just a little bit so you can see the entire screen. And our liabilities, as we calculate, it looks like it is $8,550. Now, our owner's equity, we just calculated that, so I'm going to scroll up a little bit so you can see what that is. The owner's equity we calculated is $68,210. So I'm going to put that in the field. Now, as we know, the balance sheet is going to be assets equal to liabilities and equity. So, next step we're going to have to do is add those two together. So we're going to add the 62,210 plus the 8,550. And we see now that we have a balance sheet that balances. The assets of $76,760 is equal to the equity and the liabilities of $76,760. Once we have it in balance, we know we can proceed forward. And in this transaction, I'm just going to plug in the cash transaction. A statement of cash flows is only going to show cash in and cash out. And we got cash received from our customers of $1,000. I paid for rent of $1,000. We cash received of $6,200. Our supplies is we spent $800, so that's cash going out. Same is true for our utility payment and for employees, which give us a total of $2,460, which is going to be the net of the $6,200 and those other outward expenditures. So the next is going to be our investing section, and we have outflows of $2,530 from we purchased equipment and $4,800 electrical equipment. And then we're going to put in our total, which is an outflow of $7,330, which is the combination of the two transactions. And our final section is the financing section, and these are outflows only, outflows, inflows if cash. $65,000 came in from the owner, and $950 flowed out as a personal withdrawal, which gives us in effect the net effect of $64,000 inflow, $50. Now we have an increase of cash of $59,180. This number here is going to be the combination of the 2460, 2,460, the negative 7,330, and the increase of 64,050. We have no beginning balance at the beginning of December, And then we have our $59,180. And we have completed our statement of cash flows. So I want to go back to the beginning to take a look at the transactions that we recorded and how they flow to the various income statement, balance sheet, statement of owner's equity, and a statement of cash flows. We're going to stop at this point, but I want to let you know that using the accounting equation in this way does give you some idea of how the various accounts relate to one another, the relationship between the assets and the changes in equity and liabilities, but also sometimes you have the flow between assets from one asset account to the other. In the end of the day, assets equal liabilities, and equity just demonstrates the equality and the balance of these transactions. And when you're working on the transactions, just note if it doesn't balance, you obviously have to find out what's going to be the change in the asset side, if any, and then correspondingly, what's going to be the change in liabilities and equity. Noting that any equity changes will also affect or reflect the revenues, which is an increase in equity, and expenses, which is a decrease in equity. If you have any questions at all, let me know. Review these transactions, and the financial statements that accompany it over and over again until you can hone the skill at least a 70% accuracy.